What's up everybody, my name is Wes DeVore and I'm here to talk to you about how to buy stocks on sale by lowering your cost basis to make huge long-term gains. So what is cost basis? Cost basis is the average share price that you paid for each share that you own of a company. Of course, the tried and true mantra goes, buy low and sell high. Well, how do you buy low if you've already bought high? By lowering your cost basis. Of course, because I want good deals, I want to figure out how to lower my cost basis and in turn lower the average purchase price of my investments. So in a straightforward way, all you have to do to lower the price that you bought a share is to wait for the price to drop and then buy it again. This will effectively lower your cost basis. Let's look at an example. Let's say on October 1st you bought one share of Amazon for $2,004.36. Following month you noticed that the stock price had dropped by 20%. And now the stock that you purchased for $2,004 has dropped to $1,665. If you were to purchase another Amazon share at $1,665.53, your cost basis would be reduced from $2,004.36 to $1,834.95, or the average of your two purchase prices. 2004 plus 1665 equals 1834. If you strategically and aggressively purchase more of the same stock when its market value drops below your cost basis, you are effectively accumulating more of the same stock in exchange for less money, and in essence, saving and potentially earning more money in the long term. The lesson to be taken away is that if you believe in the company, and the company has shown a good track record of strong growth over the company's life, or the past 5 to 10 years, and you plan on holding the stock for 5 to 10 years long term, lowering your cost basis by purchasing more of the stock when the market value drops below your individual cost basis is a great idea. Now, every modern investment account in Fidelity, Vanguard, or Schwab will have a column that shows you exactly what your cost basis is for each position you own. And then most importantly and obviously, it will have a column that shows you what the market value is for that stock. So every time you see the market value of the stock dip down below your individual cost basis, you have an opportunity to buy that stock on sale and effectively lower your cost basis. So what this means is that every time the stock grows in value, if you've been lowering your cost basis, you're going to be banking greater gains every time the security increases in value. Let's look at one more basic example of how this works. Let's say that corporation ABC's stock price market value is $100 on January 1st, 2019, and you decide to buy 10 shares for $1,000. Your current cost basis is $100. That's 1,000 divided by 10 is 100. Next quarter in April, their stock price drops to $80 per share. You have three choices: sell your shares and cut your losses. 2, do absolutely nothing and wait it out. 3, lowering your cost basis. So in April, while the stock is valued at $80, you decide to buy 10 more shares for $800. Now you own 20 stocks of corporation ABC, and the average share price at which you bought them is $90, as opposed to earlier the average share price that you bought corporation ABC stock was $100. Now let's say next quarter in July, the stock price depreciates even more to $70. What are the three choices? 1, be fearful and sell and cut your losses. 2, hold and wait it out. 3, lower your cost basis again and buy an additional 10 shares for $700. This will effectively lower your cost basis from $90 to $83.33. That's a whole lot better than your original cost basis, which was $100. Let's say then that 1 year later, the stock price jumps up to $115 per share. Now at this time, you own 30 shares of corporation ABC stock and your cost basis is $83.33. Because your cost basis was $83.33 and now the current market value of the stock is $115, your investment would have grown by 38%. If you were to have just bought 30 shares a year and a half ago at $100 each, when the market value of the stock grew to $115, your total investment would have only grown by 15%. If you had bought 30 shares for $100 and not lowered your cost basis, your $3,000 investment would have grown to $3,450. That's a $450 gain, leaving you with $450 of profit. If you had been more aggressively pushing your cost basis down to $83.33, as we saw in the previous example, your own investment would have only been $2,499, and this would have also grown to $3,450, leaving you with a a profit of $950. You can see that in this example, by pushing your cost basis down, by purchasing stocks when their cost basis dips below the market value, you are able to capture an additional $500 of profit. When markets go down, people tend to panic and not want to buy anymore. However, if you're a long-term investor, this could be a great chance to buy some stocks on sale. Warren Buffett's famous quote is applicable here: "Be fearful when others are greedy, and greedy when others are fearful." Now again, I want to emphasize that this quote applies to investors with a long-term outlook, 5 to 10 years at least. Here's another famous Warren Buffett quote on long-term investing: "I never attempt to make money on the stock market. I buy on the assumption that they could close the market the next day and not reopen again for 5 years." This quote shows how Warren Buffett feels, that any type of investment with a perspective less than 5 years is speculation and not real investing, just gambling. It's important to pick investments that have a history of doing great business. When reducing your cost basis in companies and funds like these, with a long-term outlook, 5 to 10 years, you are no longer a speculator, but you are a real growth investor, strategically building wealth. All right, everyone, I wanted to release a video on my perspective about cost basis. The markets have been pretty crazy lately, so it's good to keep a level head and always plan for the long term. Thanks for watching, everyone. Be sure to hit the subscribe button, hit the like button, ding the notification bell. Let me know your thoughts, leave a comment down below, and I'll see y'all next time. Take care.